Welcome to A Scrap Life, a podcast solely focused on the hustlers, grinders, operators, and business owners who live and breathe the scrap metal industry every day. We are the original recyclers. No suits required, just guts and hard work. Here is your host, Brett Eckhart.
All right, we're back. Bulls versus Bears. I felt like last month I stood a chance to present a pretty positive case to Chad, and this month I feel like it's gonna be a tougher sell for me to get off this month, but we'll see what happens. What's going on, Chad?
Oh man, happy May.
Happy May. What was the stock market saying? They said sell in May and go away.
Sell in May and go away.
Isn't that like the saying for a long time? It's just everybody that waited until May to sell scrap, you might have waited too long.
I tried to trade stocks once, and the guy said, you got to turn your charts upside down. You don't know what you're doing. And I feel like that's this year, like I think if you look at the historicals, the last, 10 times we've had a bloodbath opening like this for a year.
Yeah.
We typically come back some. So could be a good chance to get some bargain deals, right?
Yeah. I mean, I always felt, it always depends on your outlook, right? And like I always said, I'm an optimist by nature. So I'm gonna try and find the shiny part of the turd most of the time. And on this one, it's getting hard to find the shiny part, but I feel like it's more. I feel like this one's definitely more China lockdown driven than anything, just because people are kind of, I don't know, right now kind of questioning, inflation. They're questioning, the Fed raising rates. They're, logistics is a theme of not just last year, but it looks like of this year. And so there's just a lot of question marks out there. Obviously, Russia, Ukraine, that deal, and Europe now getting more involved. And there's just so many question marks. I think people get nervous and they go to cash, or they want to just, have that level of comfort. So I feel like that's where we're at right now.
Yeah, I feel like there's like three major points in the May market. One would just be, like you said, China and overall less consumption. I mean, when it comes to steel making, China, they're the grill in the room compared to the US. We're nothing. So
Correct.
when they turn the faucet off, that turns a lot of other things off too.
Yep.
And then the second one, I feel like this month we've seen the panic in March, and now new trading routes are coming available. Russian billets, Turkey, those type of things, where buyers all across the world are starting to figure out the new world order, the new routes.
Yeah. You know what kind of reminds me of, like when China came out with green fence, right? It took a while for everybody to adjust. Okay, so where am I going to go with my sealed units? Where am I going to go with, this commodity or that commodity? And it kind of took a while to figure out those trade routes, right? I mean, you saw things kind of that we're going here to now they're going here, and but that took a while to evolve. And so I feel like, just like you said, and probably more particularly with, the gas and oil situation than say scrap. I think there's bigger fish to fry in the room than what the price of HMS is doing for some of those guys. They're like trying to figure out how to get electricity and eat. But they all play together.
Yeah. Well, I think that's the third component I'd say is the big as I see a big data point in May market is logistics.
Yeah.
I feel like there's a lot of scrap that tried to move in April. And
right. The key word is tried.
Yes.
Yes.
So I wouldn't be surprised if, I don't think you can just turn a switch on and all these ships can go different directions. So I think the world's still going to have to feel that out. And I can only imagine grain season comes, what that's going to be like, all the new lanes that are established and how that really tries to work itself out.
Yeah. What's the scary thing about it, when you think about it is, we live in I live in a scrap world, right? Copper and iron and aluminum and, some PGMs. But what makes me really kind of like, take a step back and look is, with Russia and Ukraine being like, the bread baskets, or, some of the bread baskets of the world, is I think the food deal is going to become, a huge component of this whole mess. And, I almost say we have a first world problem in trying to move scrap. Like, it is what it is. That's what feeds our families, what feeds a lot of people's families. But, food is what really feeds a lot of people's families. And I feel like that's going to, that's something that's going to have to be taken into consideration when you start talking logistics and bulk freight and lanes, and, it's going to be a component.
Yeah, it's going to be interesting, and absolutely there will be some less calories being consumed when all this shakes out. That will be a scary thing.
So let's move the conversation to scrap. I feel like the market's probably going to be up this month.
Well, Eric, you want a bull point? I found one right here. Look at this. Consumer confidence, man. We went from 59 all the way up to 65. We're raging over here.
Yeah. That chart in of itself is we're on the upswing, right?
I think we're still in the downtrend. I don't know. Did it break?
You would have thought that 2020 would have really killed some consumer confidence, but I guess they were so quick with stimulus money that solved that riddle, pretty quickly. But
I was surprised month over month this went up by 5-6 points.
What will be interesting if the rest of this month plays out the way today played. I want to know what that number is going to look like at the beginning of June. It could be rough.
Yeah. Well, all right. So let's talk about some of the bearish points. I feel like probably the first one we got to talk about is the old PE ratio, right? Earnings.
Yep.
And so we took a big drop, 37.39 down to 32.53. So that's no bueno.
But the trend is your friend in general.
Yeah. We're still,
you think, ultimately, like you said, just like on the flip side of the other one you just showed, this one, the trend is still technically
intact. Yeah.
Intact. Unless it finds a bottom.
Yeah. Then in the overall fear of greed index, this one's I feel like you got to chart it to give the overall emotion of the market. And this one went from, 55 last month to 26. So a lot of scared people out there about the market overall in general.
Well, and rightfully so. The way that it's treated, the way that it opened up the year, right? At least on the stock market side. On the commodity side, it opened up fairly strongly. And we've had some really good runs. On the stock market side, which I don't dabble very much in it, just enough to be dangerous, and that's probably it. I could see where on that fear greed index where people could be running for the door, which generally opens up opportunity for some good buys if you're willing to extend your arm out there a little bit.
Yeah, it's tough to call market tops and bottoms, and this would be an opportunity if you wanted to say it's definitely lower as the year trended on. So maybe we are getting close to a bottom. One chart that I got, can you see this all right?
Yeah, I'm gonna move us. There you go. Big iron.
Yeah. So you look at this chart, we went from 1,064 was the high in April.
Yeah.
And today we're at 933. So that's $110, $111. We've lost quickly.
Yeah, but we have lost quickly. But look at the move from say the 21st of February to where even it sits today, right?
Yeah, right.
I was talking to Nick this morning. I said, you have to keep in mind, it's like somebody that makes $15 an hour, and then the next month you pay him $20 an hour, and then the next month you pay him $22 an hour, and then the next month you move him back to 15. Like, did they really lose anything, or did you just get a couple months where you made some extra money?
Yeah.
Like, if you didn't adjust your lifestyle to $22 an hour.
Yeah, and that's the question, right?
Yeah.
Did you go and buy did you get an extra $400 a month and just buy a camper or an ATV, right?
And in this case, you only went from 22 to 20. Like, you didn't even go all the way back to 15. You know what I'm saying?
Well, I think that I think the pig iron market's gonna be tough because from what the earnings guys talked about, both SDI and Nucor hinted that their supply was secured. SDI said through 2023. So if their supply is secure, that tells me a long-term agreement. Yeah. And so did they lock in that price?
Did they lock in the spread? Like, I would assume they locked in some sort of spread, not even just a price, right?
So if that happens, how many open market transactions are going to be outside of that? And with that being the case, how's this index really going to move with the market when you take out two of the bigger consumers? So
yeah, that's an interesting conversation. Probably something we're going to have to watch play out, because I don't think anybody's going to give us that info.
No. So I won another chart that's looking stellar is the steel U.S. imports. I feel like this is a big impact. So month over month, we're up 24% on steel imports. So if you look at operating rates, we're fairly flat from last March, or we're around March 5th, we're 80%. April 2nd, we're at 79.3%. So fairly flat. But so why would there be less steel demand? Why is hot rolled down from, what was this? Why is this down? Why are lead times down is another one. Let me see if I can find that chart. Lead times are down from 6 weeks to, let's call it 6.5 weeks to 4.5 weeks. So there's all things encompassing steel. Why are those? And I think imports is a big piece of that.
Imports, because the material coming in, because you have to think you're at roughly a 20-year high on the dollar compared to the Japanese yen, and then you've got whatever the basket of currencies. We're at a multiple year high. So, when you have the strength of the dollar like it is right now today, that's going to drive import pricing, right? Does that thing keep running? Does the strength, keep going? And I think that's a big component of the scrap trade right now. Take Ukraine, Russia, China, all out of that. When the dollar is as strong as it is, and you start talking about, lanes of shipping and stuff kind of getting redirected, currency is a huge role in that.
Yeah. And I feel like talking about the overall economy, you ever heard of the expression Dr. Copper?
Oh yeah. Yeah.
So this one isn't good for Dr. Copper.
Well, and this one, to me, has China written all over it, right?
Yeah. So for the people that aren't watching, we're looking at copper chart is at 480. Highest 490 in March. Now we're at 428 this morning. So
yeah, this one is definitely makes you kind of blink twice, right? That's a big drop in a hurry. So I guess you can look at it two ways. Does it bounce here, or does it just keep going? And I feel like copper will kind of be, it's always been somewhat of a telltale sign of what's going on, but that's a precipitous drop. You go from 480 to 4, I think it was like 426 when I got on this meeting right now. I was like, here we go. And this is what I was telling you, that my wife was calling me about the flag football game. I was like, I got bigger fish to fry right now than what's going on with that game.
I love it. So I don't want to pick on you, but I think the trend broke on this one. What do you think?
Yeah, it looks like it not only broke, but it like screamed through. Yeah, it screamed down in a negative way. So,
well, let's look at another one that maybe hemorrhaged here. What do you think of this one? 80-20 turkey consumer price. So we're at, depending on the chart, right? Some guys said as high as 660, 670. Now they're in that 555, 570 range, So either way, it's down anywhere from $95 to $105 a ton.
And I feel like the domestic mills chased it up, but I don't think they chased it up as hard, right? Because it'll be interesting to see what the markets come out and basically what it trades at this month. But I'd be hard pressed to see, the domestic mills take that much out of it this month.
Well, I think the exporters on the coast, right? I don't know if they bought the top. I don't think I agree with your expression. They didn't. The guys that are buying for these vessels did not move this full move.
Yep.
So
they took some cream off the top, and they're going to probably take some of the crap off the bottom, but if they did it right, they didn't get, they didn't probably pick the average somewhere in there. They're probably going to be okay. I'm more interested in how do the domestic mills treat this, because as you saw, capacity and utilization is still decent, is from on a percentage basis. I feel like the demand is for today still there, depending on what those interest rates, how hard they go. So I feel like as long as the demand's there, if there's anything I know about you steel mill guys, or at least new steel guys, is you do not like the price to drop. So,
well, I mean,
the price of new steel.
Okay,
you don't mind the price of scrap dropping. You don't like to see the price of new steel come off. So you're what's that?
When new steel does drop, though.
It's times 3.
Yep, here comes the hammer.
Us poor scrap guys.
Exactly. So I got a question for you. You kind of walked right into it. Yep. You said, hey, the exporters, they didn't go the full up, right? And so we can't go the full down. I mean, did guys across the scale in the US in general go all the way up? And therefore, when this market corrects, our flow is still going to remain. I mean, how are your amounts? How are your flows?
I truly feel Idaho, or in the Northwest where we're at, because its seasonality is definitely a component of what we do. As long as the pricing is decent, right? If we can pay $200 for a ton, $200 a ton for iron, generally speaking, that's always been like that sweet spot number. Like if you can still pay 200 and make some margin and get it out and keep the lights on, that number, for whatever reason, as long as I've been doing it, has always kind of been okay, we'll move it, right?
Okay.
So the flow, I think, as long as the market doesn't just get crushed, right, then I think the flows will stay decent. We're coming into spring. I mean, we've had a rough April weather-wise, and I would say rough, like cold, not necessarily as much precipitation as we would like. So we're going to ride a pretty good drought over here unless something crazy happens. But if we can get, some good weather, and maybe in May, and the price stays relatively within reason, I feel like the flows are probably going to be good, which then makes me wonder, like, and you probably have some insight into this. A lot of people sold a lot of scrap in April on paper, but how many people actually got that shit delivered in April and what percentage of that actually, got delivered?
Yeah, and I think that's and I think that's a great question. I think there's a lot of mill buyers or steel mills that got in the office this morning, and the first thing they did was print out a report that showed how many tons were we effectively canceled. Like how many tons did we actually get canceled off?
Yeah.
And so, because I'm sure there's a lot of shipping notices in the late of last week. And so that's why I said the logistics thing is important. I feel like April was a stellar month. I think at least in the Midwest, flows were good. The weather was decent, meaning you need guys that had tons wanted for sure to get them all out. Maybe they even sold extra. So it's just about how much can we possibly get out. So I think there was a rail car shortage around even more so last month. So I think that's a great question. And I think I can show you a chart here that's something new I added. This is by the AMM. This is their forecast model. It is what it is. The accuracy of it, I don't know yet, but I think it's telling where everybody's psychology is at. They're thinking, hey, these steel mills are going to push it way down too much in May. We're going to have this huge correction down. And then this chart would illustrate that we bottom out after that. And so to your point, did people sell a lot of paper? Steel mills feel like, okay, there's scrap everywhere. They take too much out of it, and then these things start rebounding. That's what this chart would illustrate. I mean, I personally have a hard time seeing a market change in 30 days, but what do I know?
Well, we didn't anticipate the jump in the March that we were going to get in April, right?
Yeah,
I mean,
right.
That was almost like I almost felt like that was a gift. Like it wasn't planned. It wasn't. I mean, if you predicted that, then please come over. I'm hiring, like come trade my scrap because, I'll take it. I appreciate it, but it wasn't in my forecast.
Yeah.
So if this actually comes back down and levels back out to those March levels, February, March levels, I mean, I still feel like you're in a good position to move scrap. And that's the way that's kind of the way I'm looking at it myself.
Yeah. So I think we're heading into summer. Scrap typically flows better in the summertime. And like I said, some of the parts of the country, the weather wasn't all that great. So Midwest it was, but other regions maybe not. As like North, I'm thinking North, particularly. So that's where it feels like, even if paper was sold, okay, if guys are selling it, I guess what's your game plan? You buy, sell what you're going to get in. I mean, I think that's always the target for most guys. So that's a good place to be in a market.
Know what you're going to get in, but logistically, can you move it? Like that goes back to the one of your top 3 talking points is
I like it. Yeah.
Logistics, right? Like
right.
Shit, I could sell scrap. I'll sit back here and sell till my ear gets sweaty from talking on the phone, but ultimately it doesn't do you any good if you can't move it.
And you're supposed to tell me in chat, this whole COVID thing's going to be done with China in 30 days. They're going to turn the switch back on and things are going to rocket. I mean, come on, let's be optimistic.
No. And that's what I'm saying. Like I'll sell and sell and sell into the market because I ultimately do believe, and I was talking to a guy this morning and he's like, what do you think about this mess? And I'm like, oh, I mean, buckle up. It's going to be a good ride. I said, but I still feel like China's the driver, right? Especially of copper for sure, and on the PGM side, palladium, they're a big driver of the palladium and PGMs. And if their economy is rough, if China's economy was just starting to get rough like this month, then I'd say, hey, we got a way to ride this. This thing's going to go farther, but it's been rough for long enough now that I feel that they're going to have to they're going to have to pick a lane, right? Either you ride this COVID thing another month or 2, or you eventually say, okay, turn on the print press. Like we got to outprint the US, right? Yeah. Or out stimulate out something because it doesn't do them any good in the long term to keep it this way. In the short term, I think they're soaking up some cheap commodities prices, in my opinion. Like, okay, they're going to buy. I think they're getting it down to where like they can make some good purchases. If the Chinese brokers stop calling me, trying to buy scrap at these prices, then I think we got a problem. But if my phone starts ringing harder and harder at these prices, then it tells me there's still demand. They're just somebody's trying to take advantage of the price, right?
And we're really talking about 2 different buckets. You got the ferrous bucket and the non-ferrous bucket.
100%.
You're talking about the non-ferrous bucket.
But I'm still saying, I'm saying that they do somewhat operate, in tandem to a certain extent, right? Because if the base metals on the non-ferrous side are just getting crushed, nobody on the ferrous side is like, let's pay more for iron because, like they're looking at those like as similar, they may not be driving down the same lane, but they're on the same freeway, right? Okay. Like, and that's why I use those as judgments, like going into the end of the month or the opening of the month, because if the non-ferrous markets are strong and those deals are ripping, then at some point the ferrous comes along with it for the ride. Maybe not to the extent on a percentage basis, but to the extent on a, directional, like positive, negative. So that's where I'm used as kind of my rough gauge. But China, like you said, they are the gorilla in the room when it comes to consuming ferrous scrap, right? And making steel. Yeah. So if they want to turn it on and say, all right, let's go, then, I'm raising my hand saying I'm ready to ship. I feel like that this thing has some still has positive momentum. Maybe not today, but the optimist in me says Don't count yourself out.
I like it. Well, what do you, I mean, so you feel like flows are going to be
I feel like
decent,
scrap flows will be good this month.
even if we take this big, huge correction.
100%.
Yeah.
For us. Now, I don't know, like I don't run a shredder, right? So I can't predict like a big shredder yard that shreds 50,000, 60,000 ton a month, what their flows are going to look like. Are they going to have people sitting on car bodies and tin and saying, no, like we're not going to,
No, I want your little bite, hey, those damn
Yeah.
exporters, they didn't go up all the way and we're not going to go,
Yeah.
I think it's going to balance out. So
in my personal opinion, the bull case is that if you want to overcorrect it and you want to drop the crap out of it, people have still had a good enough April and March that they'll have enough money that they'll say, fuck it, I'll wait. I'll gamble on the upside, right?
Well, you feel in May heading into the summer at whatever prices are going to be at, you're like, yeah, I want to hang on to it. I want to be long in this market.
Depends on logistic. Like for me, right? Like, and I can only speak for myself in this particular situation is logistically, I moved a lot of scrap in April, right?
Yeah.
So technically, I can lay a shit ton of scrap on the ground and be just fine on the ferrous side.
Yeah.
Especially if you're going to drop the price, because now all of a sudden, cash flow wise, if you take a jag of the purchase price right off the top, all of a sudden you can lay down a lot of tons again at cheap, right? Yeah. And all you do is just average your way back into expensive scrap if you have to, or you can go take the L and sell at, a shit price for May and be like, oh, I just take my loss and then try and average your way down then. But I would almost just say, take your price down, average your way back into it. All of a sudden now, if you've got good volumes coming into springtime, get your price down and average your way into it. If that's what you have to do.
That's why you make the big bucks, man, right there.
No,
given the insight, people should hear that. So there's definitely two different philosophies of how to attack a market like this. And
here's the flip side. If you bought or you held on to scrap and you've got a lot of scrap from the last 2 months and you ordered a bunch of rail cars and you couldn't get trucks and you got a yard full of shit, you better move some scrap.
So I think that's the question. I feel like some grades like heavy melt, for instance, and like Turning's price fell more than most. So those grades were probably illiquid, hence the pricing were falling. So I think there's probably people in certain parts of the country that have a lot of heavy melt, have a lot of turnings. So I think they have no choice. They have to try to keep moving it. And like what you're saying, if you were successful and you were able to control your own destiny per se and let's just say you got your yard completely 100% clean. Well, okay. I see what you're saying is if the scrap's going to flow, buy it right. And so be it. Right. But
yeah, especially if you've had good cash flow months preceding to that. Right. So like, if you've had the ability, I mean, what are you going to do? If let's say you've made good money in March and April, you can go put it in the bank. Like what the fuck? What are you going to do with a bunch of cash in the bank? But if you can go buy $200 iron, going into a potential, Cold War, going into a potential China stimulating the economy, going into, what's the dollar really going to be worth? The dollar today is at a 20-year high, multiple year high over all the other currencies. So now you're telling me that going and putting your money in a bank at 2% return is going to make you more money than saying, fuck it, I'm going to put $2 million worth of iron on the ground at $200 a ton and let the chips fall where they may. Like, I'm not that smart of a guy. Like, I really ain't, but I feel like there's some opportunity there.
Well, to balance that out, I feel like interest rates, I feel like most people are bearish. I think, there's rumors of these interest rates rising. I think the consumer confidence could drop. At some point, these construction projects have to holy mackerel. Yeah, that new house, that new building, that new bridge, that costs a lot. And so I think some of that optimistic than optimistic about later in the year on an overall commodity pricing.
Yeah, we'll see. Time will tell. And I don't know. I feel like this thing isn't as bad as what it seems today. But.
Well, no, I think that's the crucial point right there that most steel mills will not understand is the mindset of a person that owns a yard, who has room, who has some bucks. What are they going to do? And so that's what will make this trade more interesting.
That's why the buyers are important, right? Like I feel like whoever the steel mill buyer is, like it's important for them to understand that each yard is built different, right? Each seller is different, and you can't approach it like a blanket statement of we're off X or we're up X or we're only going to take X from you. And X. I feel like if you truly are good at your job, then you truly know what each individual producer needs, wants, and like what their appetite is on a month by month basis, right? Like, and that's what makes the good traders good, is that they have a feel for their market, right? They know who's got to move tons, who didn't get to move tons, who, you know what I mean? Like who's going to be a consistent, who's not going to be consistent, you know, who's going to produce the best scrap ever and who's going to produce shit scrap, right? Like there's, you know what I'm saying? Like there's just so many variables to the people that can do it good. And if you're just a quoter, like, then that's all you are. Like, I mean, then that job should be automated. Like you should have a call into the 1-800 line and say, what's the price of HMS today? Because I don't know anything. And all I'm doing is just quoting a price.
Like, they're exactly right. That's the dynamics of all the scrap metal world, from the industrial buying from the peddler, the industrial account, all the way to selling to the steel mill. So that's what makes this game fun. It's not, no one case is the same.
For every guy that sold Netflix at the top, there's 8 guys that bought it all the way down, right? Like
averaging it in.
Like that stock doesn't get sold unless somebody was willing to buy it.
Yeah.
And that just goes, you know what I'm saying? Like for whatever reason you bought or whatever reason you sold, you know, it depends on the individual or the trading house or the, you know, the firm. But scrap's the same way. Like you bought because you needed it, or you bought because you thought the price was right, and you sold because you thought the price is right, or you sold because you needed it, or whatever it is, right?
Yep, exactly.
Same dynamic.
I love it.
All right, man. Hey, I do want to touch. I was gonna warn you, but I do want to touch base and real quick, and we'll do a podcast specifically about this. But I'm super stoked about our NFT project. But what I'm more stoked about is the component of it that you're involved in, which is the Discord. So we are in the process of setting up like a badass Discord for our industry that's, you know, that basically touches non-ferrous, ferrous, and is going to provide, you know, where we can basically help each other out and, you know, provide kind of general information about scrap, equipment, maintenance, you know, pricing as far as regionally, what, I mean, is it getting hammered? What does it look like? And you're a big component of that. And we'll do a special podcast on it, but I just kind of wanted to kind of let everybody know, hey, it's coming. We're going to have a scrap Discord that's going to be hopefully pretty informative and pretty insightful, as long as people are willing to get on there and contribute. So,
well, Brett, you're leading our industry into the new age. I feel like this NFT project and the community aspect will be exciting. Well,
you're a big part of that, man. Like I said, like we've kind of built off the back end on the NFT side, and it's going to be cool. But the bigger part of it is the NFT and what access it gives you and the information it gives you is the bigger thing that's coming with it. And so it's And I think that's the best part of it, and guys like yourself that are vested in the industry, that have knowledge, that understand what's going on. They understand the tech side of it too. So it's a matter of just getting all the right people in the room, and that can make it happen. So that's what we're working on.
I'm excited.
It's coming.
I love it.
All right, bud. We'll talk.
All right. Thanks, Brett.
Yep. Take care.
All right. See ya.
Bye.